With the Investing News Network, I'm Scott Tibbles. Today, I'm at the Vancouver Resource Investment Conference, and joining me now is Gianni Kovacevic, CEO of Copperbank Resources. Thank you so much for joining me, Gianni.
Great to see you again, Scott.
So, of course, you're known for copper, so let's start there. 2019 was a pretty interesting year for the metal. It made a lot of gains in Q1, lost all those gains and then some in Q2 and Q3, but then in Q4 it ended up ahead of where it started. So can you run me through copper in 2019?
How does the movie end? Copper is a commodity. So all the guys here in junior mining, I keep saying this, nobody in the real world likes high commodity prices. They're fabricators. So at the same time, because people make things, this is rule number one for any commodity speculator. Running out of a commodity does not matter until it matters, and then it matters a lot. So if you look at any 20 commodities, hard and soft, over the decade that was or was not, if you were an investor, there was no greed in the system. Almost anything you wanted, you could have obtained. The outlier, of course, on this graphic would be palladium, which is now up 500%. And the interplay between platinum and palladium, which you can go back 30 years and look at the difference between the two. And I believe, and I think a lot of people don't disagree with me, in the long run, because of this reliable, compounded growth rate, which is going to be in the peak of the electrification pivot, which takes place for the rest of your life, Scott, you're going to see 3 and 4% CAGR growth rate in copper. Glencore has done a calculation in the next 10 years on a medium scenario of electrification, or decarbonization, if you will. And the demand growth should be about 3.6%. That's an interesting number because in the heyday, the China super cycle, going from 2000 to 2018, where we had a rise of all commodities, copper specifically 500%, the industry was able to deliver 2.6% growth. Those numbers are going to collide very soon. So I believe we are balanced. A recession is something that everyone wants to talk about. Could this derail my joy and the joy of copper investors? That's an important question.
Okay, so demand is holding up. What about the impact of the trade war through last year and going forward? By the looks of it, it could be cooling off a bit. Do you think that it's had any sort of impact that we can measure?
This is a new Cold War. The interplay between China and America is going to be there for a very long time, just because of the power that the Chinese economy has now, $14-15 trillion of output. So yes, it has had an impact, obviously. Around the world, people that make things slowed down, bought a little bit less, manufactured a little bit less, procured a little bit less building blocks for whatever they're making. So if we get a recession, which is inevitable eventually, we will get one. These things are normal, healthy parts of the business cycle. If it's nearer term, that might be factored in already. Because when Donald Trump put the first tariff in the summer of June of 2018, that slowing down of all these building block things already occurred. People are going hand to mouth. There is nothing to destock. In fact, it's now restocking. So it's always important. I don't think it's going to be as impactful as it could have been if we didn't have that dramatic stop to everything 18 months ago.
And what about the electric vehicle story? So obviously there's a lot of talk about batteries, and copper is absolutely a part of that story. Has the EV demand been stacking up to what you expected? Is it doing better, worse? What are your thoughts?
It's kind of, this is an iceberg, and it's turning, and we know that all the major manufacturers around the world are changing fundamentally at the chassis level how they make cars. This takes, I'll even go to say, 2 life cycles of a vehicle, 8 years, till you really see the impact on that, because the consumer, you and I, we need the offering. Price does matter. Now, fortunately, in the West, most people don't pay cash for a car. They pay on a monthly payments. So don't be concerned. People out there should not worry about, it costs $5,000 more. When you amortize that over a lease payment over 5 years, it's peanuts. And you save a lot of money in the tank. Not in Texas, where gas is $2.50 a gallon, but in Germany, where you pay $10 a gallon. It matters more. And oil prices are cheap. They're only $60, $70. Protests all over the world. They're making cars. It takes time. With much fanfare, Tesla built a factory in Shanghai in 12 months. They are now starting to put cars out at $1,000 units a week, which is going to ramp up more and more. but they didn't buy their copper until just now. Mercedes, BMW, Volvo, Volkswagen, all these companies are going to start buying millions and millions of kilometers of copper cable for the rest of your life. That's good. I'm not too worried about the demand of copper coming soon. 10% EV penetration is approximately 1 million tons of copper, new demand. So that's another 0.5% at 10% and growing. And then of course everything else that's even more copper intensive, the way we actually create the electricity. It's going to be renewables augmented by natural gas. 500% more copper on average for each megawatt they build.
Okay, and for another commodity that you've been interested in recently, so here at VRC you're going to be hosting a talk, Helium 101. Can you just run me through what you're going to be talking about and why you're so interested in helium?
Yes, I'm a propagandist, Scott. Remember, how to make a fortune with helium prices soaring. That's a tricky question, not so easy. Very few ways that people can speculate in helium. So I talked about the interplay between palladium and platinum. And if you go back 25 years, the price of palladium was around $200. It's now $2,300. It's a 10 or 11 bagger, front page news all over the world. My friend Don Cox always says, never invest in the story on page 1. That's the efficient market. Invest in the story on page 16, headed to page 1. That would be helium. The BLM does annual contracts for helium, and they've done that out of Amarillo, Texas, out of the the helium reserve since decades. And there's a price. You go back to the late 1990s, the price of helium from the BLM was $50 an MCF. The last contract happened in 2018, $279 an MCF. 2019, August, there was no auction. They're out of helium. Do you know what you're paying now for helium? Unless you buy a mega bulk contract, you're paying $850 to $1,000 an MCF. That is a 20 bagger of price increase. So you want to talk about the best commodity in the world for price appreciation? Yes, palladium's good, and I think some of those stocks have done very well. But if people want to speculate right now, you want to be looking at helium, and who's going to be drilling 5 wells on 2 projects in the first half of 2020? Desert Mountain Energy, symbols DME. I own it. I'm speculating with them because it's the best basin in the world. The Holbrook Basin, which is the New Mexico-Arizona border, has the highest grade helium production in history. The most prolific wells are right there. They've got these really special anticlinal features in the geology. They're shallow, cost effective. So that's how I'm speculating. And we're going to talk about all the details today, and people are going to be able to see that video, the 20-minute video, when it comes live with the Cambridge House family.
Okay, and so you've mentioned one company. Are there other companies operating in this space, or is it just...
Not many. There's been some fantastic blow-ups, people that have tried and failed. They've done it the right way. Desert Mountain Energy has 65,000 acres of land. So it's multiple opportunities in 2 areas that have traditional helium production, and it went into basically a zero zone. For 20 years, helium was not interesting. It was part of the space race.
Yeah.
It's now used as a supercoolant for technology. Google, Intel, Facebook, all these guys are using helium, and they will pay. Because it doesn't, even though the prices went up that much, it's not a big factor for the applications. Now, where it's going to get impacted, of course, is party balloons. People think of helium in those things that make your voice squeal.
Yeah.
Those days are gone. They're going to have a hard time paying for the helium. Everyone else, space race, the nuclear applications, barcodes, MRIs, and technology. The price is high, geologically rare. And stay tuned. You're going to eventually start seeing this on the front page of the Wall Street Journal and Barron's and elsewhere. But you already should be invested. You need to take a look at how to speculate there, in my view, if you're a contrarian investor. Okay,
and what about the geology? I mean, of course, it's a gas. I mean, where do you find helium?
Happens in Texas, New Mexico, Arizona, up to Oklahoma, Canada, Qatar, Algeria, Russia, and also now they have a big discovery in Tanzania. So, but that one has a little bit of political sensitivity. But you need to get it to the client. Helium, transporting helium is like transporting milk. It unfortunately, you keep losing it over time. So the best location is close to the technology companies. The best location would be where there's already processing facilities. Where's the biggest processing facility in the world? The Four Corners.
Yeah.
It's exactly where Desert Mountain is operating. And of course, the technology companies that pay the big bucks are going to be in the United States or China. I like their location.
Okay. Well, fantastic. Well, thank you so much for giving us an update on copper and helium. I think on that note, we'll end it there. Thank you so much, Gianni.
Thanks. And don't forget, we got to plug my book just once.
Absolutely.
So it's still available. And now, Scott, it's on audible.com and coming to Spanish.
Fantastic. Well then, again, I'm Scott Tibbles with the Investing News Network, and I've been having a chat with Gianni Kovacevic, CEO of Copperbank Resources.